Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid, such a sucker. Sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Well, cheers to a new trading day. Really the afternoon of a lovely trading day, retail trading team. This is Master coming to you live from Puppet Show Central with your routine briefing. And we have a very macro-heavy briefing today. Partially why it is almost lunchtime, almost Twitch time, if you hang out on there as we start this. So just a couple programming notes as we begin. The newsletter I'm going to start sending out in the evenings. I feel like it's just kind of become a formality packaging type thing as of late, and that is not what I think is the most valuable way to use that resource. So I'm going to start packaging kind of a more information heavy newsletter that I'm going to send out in the evening, just kind of really doing that for myself as well, so I kind of have that journal done as I go to bed. If I do go to bed, or if I stay up like my friend Juiceball and trade all night, it'll still be there. So that's just that quick programming note. Everything else is the same. And yeah, so without further ado, I'm going to minimize the screen here, and we'll get going on today's briefing. So in terms of what's going on the price action chart here for me, execution chart, I am just sitting short, hanging out from that 32 area, waiting for that trail to trigger, and then we'll go from there. So the main thing that I've noticed today so far is that we are the most oversold that we've been, at least on the hourly chart, which is what I like to look at for RSI, that we've been all year. So obviously, once you are oversold, you can get more oversold and be oversold into perpetuity. Yet I think that is quite significant here. So we just saw a bit of a squeeze. Not too much, about 15, 20 points, 20 points, I think. So perhaps that was a little bit of correction on that front. Yeah, as the minutes approach at that 2 o'clock hour, we are definitely in that oversold area. And as we look at the macro chart, you'll see that there are a few potential support zones that we are now confronting. And so that'll be important as I think the day goes on and as we potentially look for a bounce here. So before getting too much into the price action weeds, I'm going to just go over my macro notes. Like I said, I have a lot, so I'm going to pretty much not read them verbatim, but just kind of cover them as I look at the notes here. So first things first, if you're looking at that volatility curve, which has been very static to say the least for several weeks, definitely contributing to the intense consolidation that we've seen. That curve is finally steepening a little, and so what that's telling us is that there is some real concern about what's going on with this debt ceiling. So obviously we'll see if that changes or if it does not change. Yet the curve is telling us that it is not as much of a nothing burger as one would expect, as one has seen in past years, and it's really starting to look maybe a little bit like 2011. And toward the end of this little macro overview, I'm going to tell you why. So that's the first thing. Second thing, just real quick overview for 0DT and just general day traders. We are currently in that negative gamma territory, and what that means is that dealers must sell futures to maintain delta neutrality. I think that's why you're seeing this open drive. You're kind of seeing price remain depressed despite the decent squeeze fuel and despite the 2 o'clock news, uh, which is fairly imminent. We are still seeing that selling pressure, and that is very likely because of that negative gamma and the dealers just kind of keeping their books as delta neutral as possible. So besides that, looking a little farther out into what I think is the most important indicator right now, and that is breadth. SPX is up 8% this year, yet only 38% of the index has outperformed. So this is not only a near decade low that signals poor liquidity, it's also a sign that the mega caps, those FANG stocks, are shouldering all the risk in this current market. And what that means as well is if those stocks start to sell, and you saw that a little bit with Apple yesterday, if those stocks really get some momentum to the downside, the market could really fall and enter a correction at the very least, which means 10% from the current high, yet very possibly could take us toward those bear market lows that we saw in October. So be watching those mega caps very keenly, as they say. And besides that, let's talk a little about what's going on with the debt ceiling deal and the implications. So I have to read notes here because this is getting a little bit beyond my humble knowledge when it comes to economics. So I took these little notes here. Yet it's pretty simple to understand. So U.S. Treasury currently has $68 billion in cash, which, by the way, a lot of this data comes from my friends at Tier 1 Alpha. Great newsletter. It's free. Just go to tier1alpha.com. I think just enter Tier 1 Alpha into the Googles and you can get that newsletter yourself. I'm not affiliated at all. I just think that they give some really good data. So what they point out is that is only, I think, 15 billion more than Amazon has. So the company Amazon has only $15 billion less than the U.S. Treasury. So we do not have a lot of cash in reserves there. And what that means is that a week of default could potentially add as many as 1 million people to the unemployment rate. Just 1 week. So that is not good. And really, the whole debt ceiling business is a quagmire because the rally that you've seen this year in equities has resulted from a lack of new Treasury issuance. As you can tell, it's a note I had written down. A lack of new Treasury issuance because investors shifted to riskier assets. So if you ARKK, which is kind of a sign of those risk-on investments, and so I think I just saw I was disconnected, so I hope I wasn't disconnected too long there. We'll see when I review the video. So if so, I will add some type of notes. Anyways, yeah. So just I'm going to repeat what I just said in case that I was disconnected for the most important part of that. So you've seen this move again. The rallying equities has been led by these risk-on assets, and that's because of a lack of new Treasury issuance. So if we do get that debt ceiling deal, you're going to see a surge in that Treasury debt, which could negatively impact the risky assets as the capital flows back into the Treasury market. And what does that mean? I don't need notes for this. That means that you could see a more extended sell-off in the equity market. That's kind of what you saw in 2011. That's what led to that correction. And if this is indeed just a bear market rally, we still are in a bear market, I think a similar catalyst could lead to significant downside. So just be watching that. Even if we do get that deal, it's not necessarily a good thing for stocks. So that is my macro overview of today as Mr. Ernie Peterson, the one and only legendary 5-point scalper, enters the chat. Good morning, Mr. Ernie. I'm just going to continue going here. And if you missed anything, I had a pretty good, I would say, macro overview in the beginning of the video. Obviously, I did not construct all those data points myself. I am ripping off some smarter people than I. Yet I think it was pretty helpful in kind of understanding the general macro landscape right now. So with all of that, with the euro close bringing the market back down to earth, as my good friend Juiceball is pointing out here, we're going to move into that warm-up document and get going on the price action side of the briefing today. So same thing as yesterday on that overnight inventory, you saw that down and balanced. So what that tells us is that the sellers are in pretty good control of the market, and that is further supported by that open drive. So what that means, I'm actually going to add this level right now. So the open today was at, let me just make sure I got this right. Yep, 41.40 on the dot. I'm going to go ahead and add that to the document. And what that means is there is a low probability that we return to that opening price. So I've pointed out in a few briefings so far this year, you've seen a lot of those open drive unwinds, and that is very uncommon. In fact, I think I'd have to count again, but I'm pretty sure that there were more unwinds of open drives in just this month of May than all of last year put together. So one of these days, the open drive is going to hold. I think given the look today, it's very possible. So obviously those minutes can come out and mess everything up. Yet I think that this sell may have some legs, assuming that the bulls don't get that squeeze going. Because again, we're really oversold. There's all the reason, or as you'll see in price action, there's all the reason to push us higher. Yet the bulls are, as of yet, unable to get that momentum going, and volatility is staying bid. And as we look at the internals after this document, you'll also see that those are still pointing lower as well. Mr. Juiceball, funny you mentioned that. My favorite little abdominal exercise is 8-minute abs, and I'm not even kidding. I'm going to send you the video. As we digress here real quick, I have been using this video since college, so it's he's a little old for you, so I know this is well after your youth when this video came out. I think in the 80s, yet I find it to be useful as well. So little digression there because I literally have watched this video hundreds of times. I'm gonna give it a like while we're here. And while I'm giving this a like, it'd be really swell if you'd give this briefing a like on YouTube as well, as it does help with the algorithm. So that's a little room to put that plug in nice and early right there. I would appreciate it, as it once again helps me get maybe above single digit views one of these days. So back to the briefing. We have the bearish momentum, bearish inventory that look lower, especially as we stay below 41.40 here. And then finally, the TPO is, as of now, showing trend. That and the rest of this document, which you can find in the description of this video, is subject to change as the day goes on. And that TPO very often does change as the day goes on. So our IBR, by the way, is double yesterday. So yesterday we had a large 10-point IBR, and today we have that 20-pointer. So I say that a little cheekily, but it's nice to see that the range is extending, and you're seeing that in volatility as well, comparing where we opened yesterday at 1735 to where we opened today at 1880. And right now, I believe the VIX is above 20. Yeah, VIX is up almost 10% today as we speak. That's VIX. So again, volatility is staying bid despite the potential oversoldness of the market. So you can see our zones here today, 41.08 on the bottom side, 41.57 on the upside. We're currently straddling, if you will, the bottom of that expected move range. So we'll see if the bulls pushes higher or if we get yet another day beyond the expected move. Remember, expected move outliers cluster. You had one yesterday, so it is, I think, 50% more likely. I'll have to check my stats on that, but significantly more likely that we see a repeat today. So very good, very fun, very cool. And we're going to move into the price action from there. Yes, OJ, I'm trying to get those jokes. I was reading my joke book before this briefing, of course. Oh, one more thing. Yeah, so these are the levels, also subject to change throughout the day. These are the key levels right now. I'm actually going to move down here because we did have a push below that 21. Oops. So let me get this out of the way. And we're actually moving that 21 level now down to 17. So 41.17 is going to be that lower level. Upside and topside levels are just implied breakout above or below. And the way that a level moves for me is when you have a contrary candle print relative to that. So with that, my stops just trailed down to break even. So that's cool. Not going to lose money today. That's always a nice thing. And unless obviously we get some ads and things really open up. So again, Fed minutes at 2. We'll see what happens then. So moving on from I'm going to go to the chat here because I see a little interaction. So I'm going to go to the chat, and then we're going to go to the various price action funness. So funness. I'm using a lot of words that don't actually exist today. Let's see. IB low, good point, OJ. So yep, watch that IB low. as long as that holds again. So we have that opening price at 41.40, which I think is kind of the line in the sand for bears. That is where my pivot is today. So SPX 41.30. Those of you who've been watching these briefings for a while are very familiar with that number, as I think it has been our pivot for at least 10 times, maybe more. I'm not even exaggerating. Yep, nice red candle here, Mr. OJ. Say it with him, chat. Kill him. That's OJ and I's favorite two words, at least when it comes to trading. I can't speak for OJ outside of that. I digress again, moving on to what's going on macro look, and let's get into the real nitty gritty of today's price action. So, lots going on in this chart. I think this is the most informative chart, especially for today. So, this is a little bit delayed, as I always like to remind people, because I'm not looking at this as it happens in real time. I'm looking at it on a big picture view. So big picture, if you recall from earlier in the week, my whole thesis was keep those long beta weighted deltas, but neutralize them to an extent. Probably, let's say, just to throw a number at it, keeping like 100 long beta weighted deltas against these short out of the money calls, and that's been playing out perfectly. We said that the dream scenario for that was a retest of the POC, and look at where we are right now. So we're slightly below that POC. Let me check our SPY level here. So we're at about 410.50, right below that POC right now, kind of navigating that major distribution. This is from the high, by the way. This is from the overall high. So I am very attentive to this volume profile that you can see on the right hand side of your screen there. So not only are we kind of testing that POC, we are also testing the top side of that breakout trend line, which you can see there. We are below, by the way, the bottom side of the trend line coming from the bottom of that breakout. So really interesting spot. I think these trend lines that we're looking at here are going to disappear pretty soon, at least on my chart, because what's really going to matter now is how we react relative to the POC. Hello, Mr. Logan Flips. Let's see what you're saying here. I think that's a good way to look at it. This is a really clustered area. As you know, if you've been looking at the chart for any period of time, this 4120 to 4140 area really has just been so important for the past 6 or 7 weeks, and you're seeing that here, and you're seeing that reflected by that POC. So yeah, I'm with you. Just kind of got to watch how we behave relative to that. Yet if we do start to see that extension lower, really for me is going to begin with once we get below this trend line there. I think it's a quick move to that 408 area where we may find potential support. Yet it's very possible that we do indeed get that extension lower, especially with that debt ceiling deal as mentioned in the beginning of the briefing. And where does that take us? Well, heck, that could take us all the way down, I think, to at least 372 on the SPY. So there's a long way to go before we get there. There's multiple SMAs in the way. That is definitely still a dream of the bears. Yet this POC area and how we react relative to this zone is going to be really important going forward. So a good point as well, OJ. There's still a lot of money on the sideline, so it's not like you have institutions trapped here. So we could definitely still go either way. So that's what I got going on the macro chart. Again, you're seeing that rejection at that 4 sigma VWAP band. Textbook, really love to see it so far, and everything's been working out as we'd hoped for at the beginning of the week. So moving on from there, let's look at what's going on with volatility, because that's also been really key to our thesis this week. And what was the thesis? That first ad, just kind of blindly when we hit that 4 sigma VWAP, that second layer of the pyramid once we reclaimed 1960, and finally that third when we reclaimed 2020. So that's working out really well, yet we're definitely not crashing. I said that we have to really see above 2180 before getting too excited about anything, and really, in my opinion, above 24 before I think that the bears, excuse me, that the bears are back in charge. So just a quick look at the volatility chart there with one more on our TPO, and I'm going to let you go. Don't get too excited now, Mr. Juiceball. It's a little early in the day for that. So, anyways, looking at our TPO, we did take out that one poor low. We took out those signals that we talked about yesterday. Now we're kind of confronting that final poor low near that 4110 area. One more refresher on these poor lows. When all they mean is that these are weak-handed shorts at the bottom here. And so the first layer of weak-handed shorts were unable, and really there's no significant reaction. So I don't think they were too excited to start covering their positions. So now we're kind of watching what happens as we near the second poor low. If we get through that, I think it's a pretty quick move to 4090. Yet again, there's Fed minutes at 2, introducing a lot of chaos into the already Brownian motion friendly market. But just kind of that last level to watch there. What I'm really concerned about, not really concerned, but really watching, I should say, I'm going to just zoom in here, is all that stuff on the upside. So like I said, that 40 area, once we do take that out, that is going to be the first sign of trouble for bears. And then really, if you see follow through into that 41, 44 naked POC and above, I think is a pretty quick move up to this poor high naked POC and single from yesterday in the overnight session. I would expect that area to be decent resistance. So if you see that happen during the minutes, I think there's a nice little short there. And then obviously if we pop higher, I think it's going to be a quick move from 4190 to 4200. What does that look like? What is the difference between seeing that as resistance and kind of seeing acceptance up there? I keep it simple. I definitely got this from my friend Mr. Juiceball as well, is you kind of look for a time plus number of points of acceptance. So for me, I like 15 to 20 minutes of time, followed by, in today's case, 0.5n, which is going to be 5.5 points of acceptance. So just to flash those numbers real quick, where I'm getting those from. Where I'm getting those from is the intraday levels here. This is just prior day. I actually meant to delete this before today's briefing. Side note, I'm going to start doing that just so it's clear because that's a lot of stuff on the screen. So I'm just going to get rid of this going forward. So what we're looking at are these numbers. So the end numbers just from expected move calculation, nothing too fancy there. For me today, acceptance is at about 5.44 points. I'm going to round that up to 5.5, just give myself all that extra room. So anyway, just a little quick note on acceptance there. And that's really going to do it for today. So let's go back to the execution chart, see what we got going, see if we need to talk about anything in the chat here real quick. Let's see here. Excellent. Wow, Logan, that's actually perfect. So my exact level there is 408.27. So we got some confluence there, as they say. Cool. That's awesome. So love to see that. Love when other people and I are looking at the same thing, because that usually means that other people are looking at the same thing. And how do we make money in this market? Well, it's self-fulfilling prophecy. Enough people are looking at the same thing, and they act upon those assumptions. So good to see there. OJ, what do you mean? What is your view up on volatility? Good. Clarify that. And good point on those last two Fed minutes. I think there's plenty of room to rotate to the upside to answer your question. Definitely, because as I've been mentioning, so actually I forgot to show this. I need to put this in my notes so I don't forget it next time. We're gonna go backtrack real quick for ending this and look at our internals. So let's start with that RSI that I keep talking about here. You can see, so I'm going to save you the trouble of going back all year, but this reading here, if you want to do it yourself, again, this is the hourly. This is one I like to look at for RSI. This little oversoldness here is the most extreme that I could find on the chart all year. So that's something to watch, and that's why I'm definitely on squeeze watch. I'm very happy that those stops are now trailing in profit because, yes, it could get way more oversold. You know, RSI is a lagging indicator, yet is notable when you see, I think, extremes, and we're definitely seeing an extreme there. What's your base view up level unfixed to determine your 4 sigma? Oh, okay. Well, I'll go back to that in just a second, OJ, and I'll show you. I'm not looking at VIX. I don't have a VIX view up, so that's interesting. Maybe I should look into that for my. Let's just do that real quick for staying with internals. For my macro, let me look at my settings here for you. Go. It's just a multiplier. Let me go to the description here. I can tell you. Stand by. I'll put this in the chat because it's a bunch of math. So I am a journalism major at the end of the day, OJ. So to answer your question, I direct you to this lovely resource, which can explain exactly where it's coming from in ways that I cannot even pronounce. So yeah, so I'll let you guys go just after one little look at the actual internals. So very simple. Everybody looks at this. Shadow Trader, if you've ever heard of him, I'm sure you have, has a grid for this. I like to look at just raw ADD, VOLD, and tick. Some people like to do it on the S&P or other specific indexes. I just look at it as a whole. So what you're seeing on the ADD, which is I think most important for today, is that we are holding below that negative 1500 area. That does imply trend. So as long as that holds below negative 1500, it also applies to positive 1500. But as long as we're below that area, trend is implied. You're seeing that reflected in the VOLD, which is there are no buyers quite yet there. So that's more of a trend thing when I'm looking at that VOLD. I'm not looking at the number as much as that ADD. And then finally, if you look at tick, it'll go here. It's holding below that zero line most of the day. So these are just 15-minute candles. That little line there is a zero line, and it's kind of let me zoom in here so you can see Wednesday. This is Wednesday. You're seeing it's holding, it's closing below. Oops, that's on the hourly. 1 second here. Sorry about that. You're seeing it's closed below that zero line most of the day so far. So that's just kind of telling us that that ADD reading seems to be valid, at least for now. These can always change, obviously. These are just the current internals, but we are definitely holding that bear trend for now until we start to see a change. For me, the first change is going to be kind of holding above that 1500, aka going back to like 1400, and we'll go from there. So everything is pointing lower. You look at our various risk on and defensive ETFs. All the higher risk ETFs are definitely not having the best of days, as you can see by these percent change readings here. And even as we look at those defensive, there isn't really any buying going on there either. So you have strong volatility, a strong dollar. Bonds are weak, but what else is new? But then weakness just across the market in all asset classes combined with those internals. All that means is we have no reason to think we're turning around quite yet. We'll see if that changes when the minutes come out. OJ, you mentioned here that Fed Waller's coming on in 20 minutes. That could change things as well. Yeah, right now it's pretty clear we're trending down. And in my opinion, even if the internals chart start to shift, I'm not changing my assumption until we take out that 4140 area. So, bit of a longer briefing. I'm going to do another one after market for anybody who wants to hang out. Like I said, I'm going to start doing the newsletter in the evening, and just as kind of that, adding that evening one for my own journaling purposes. So we will go from there. I'm going to keep these macro insights coming. It's kind of a new thing I've added. I think that it's really helpful for me, at least when I'm trying to make my own long-term informed decisions. I think that that is super helpful. So I'm gonna keep that coming. So we're just not these degenerate day traders only looking from that 9:30 to 4 o'clock session. We can start to be a little more sophisticated in our trading crystal ball predictions. So we'll see what happens. I do not know who KJP is, Ernie. Hey, Logan, thanks. I appreciate that. Yes. So I actually brought that point up earlier, Mr. Juiceball, if you had been on time to today's briefing. So you have the index itself is up 8%, and it's actually 38% of the index has outperformed. So it's a near decade low, signals poor liquidity, and shows that FANG is the only one really doing anything right now. So great point. Again, love to see the confluence, and thank you for bringing that up. Kareen. Oh, yes, yes. I do not hang with anybody on the political front, Mr. Ernie. It's bad enough that Twitter has to show me all that stuff. I think that's what you're talking about. Fair enough. I was I was late, Mr. Ernie, because I was getting all these lovely notes together just to give you the highest quality briefing possible. Although touche, I respect that, and I am going to now put my tail between my legs and sign off. So that's all I got going. I'm going on Twitch literally right now. I'm going to just go right from here to Twitch. So anybody who likes those lovely electronic music transitions that only make the ears hurt a little bit, I'll be there. I have been getting better with transitions. That's what my mom's been telling me. So we'll see. Just kidding there. My mom does not listen to my music. Probably that's a good thing. Let's see. So yes, hit me up there. Hit me up on Twitter at Routine Trader if you're interested. I'm going to put some stuff together in a little package there instead of the newsletter. Newsletter is going to be out in the evening. And I will also appreciate any engagement in the comment section of this video. So that's all we got going on. Thanks for hanging out. It's been a longer briefing than normal, but I hope you found it valuable. And once again, if you did find it valuable, please give it a like so we can get the view count on these videos beyond 6 or 7 or whatever they're currently at. So thank you all for hanging out. Stay classy till tomorrow, and see you then.